The Intelligent Investor by Benjamin Graham is a classic book on the principles of value investing. It's definitely a book that every investor should try to read at least once in their lifetime.
Summary of The Intelligent Investor by Benjamin Graham. Welcome to this insightful summary of The Intelligent Investor by Benjamin Graham, a timeless classic in the world of investing. In this summary, we'll distill the key principles from Graham's wisdom, guiding both novice and experienced investors toward a more intelligent and strategic approach to the market. Chapter 1. Investment versus Speculation. Graham draws a clear distinction between investing and speculating, emphasizing the importance of a disciplined, long-term mindset. Chapter 2. Mr. Market and Emotional Discipline. One of Graham's famous metaphors introduces Mr. Market, an emotional and unpredictable character. Graham advises investors to take advantage of Mr. Market's moods rather than be swayed by them, promoting emotional discipline in the face of market fluctuations. Chapter 3. Margin of Safety. The concept of a margin of safety is a cornerstone of Graham's philosophy. Investors should buy stocks when their market price is significantly below their intrinsic value, providing a buffer against unforeseen risks. Chapter 4. The Defensive Investor versus the Enterprising Investor. Graham categorizes investors into two types, the defensive and the enterprising. The defensive investor prefers a passive approach, while the enterprising investor actively seeks opportunities. Chapter 5. Portfolio Policy for the Enterprising Investor. Graham explores the principles of diversification, cautioning against over-diversification and encouraging investors to thoroughly understand the companies in which they invest. Chapter 6. Market Fluctuations and Investor Psychology. Graham delves into the psychological aspect of investing, discussing how market fluctuations are often driven by human emotions. He emphasizes the importance of understanding investor psychology to navigate the market's ups and downs successfully. Chapter 7. Investment Funds and Advisors. Graham discusses the pros and cons of investment funds and advisors, urging investors to carefully evaluate their choices. Chapter 8. The Investor and Market Movements. In this chapter, Graham highlights the distinction between an investor and someone who merely follows market movements. Chapter 9. Common Stock Selection. Graham provides valuable insights into the process of selecting common stocks, emphasizing factors like company stability, dividend history, and earnings growth. Chapter 10. The New Investor and the Stock Market Environment. Addressing the challenges faced by new investors, Graham discusses the importance of education and a cautious approach. Chapter 11. Investment Alternatives. Graham explores various investment alternatives beyond traditional stocks, such as bonds and real estate. Chapter 12. Investors' Due Diligence. This chapter focuses on the importance of thorough due diligence before making investment decisions. Graham outlines a systematic approach to research, including financial analysis, company history, and management evaluation, to make informed and intelligent investment choices. Chapter 13. When to buy and when to sell. Graham offers practical guidance on the timing of buying and selling stocks. He emphasizes the concept of market timing based on value rather than speculation. Chapter 14. Tax Considerations and Investment. Delving into the realm of tax considerations, Graham discusses how taxes impact investment returns. He provides insights into tax-efficient investment strategies and encourages investors to be mindful of the tax implications of their decisions. Chapter 15. The Investor's Role in Corporate Governance. Graham explores the investor's role in corporate governance and shareholder rights. He advocates for active participation in company decisions, such as voting on important matters. Chapter 16. Market Cycles and Economic Indicators. Examining market cycles and economic indicators, Graham provides a framework for understanding the broader economic context in which investments operate. He advises investors to be aware of economic trends and indicators to make informed decisions. Chapter 17. Long-term investing in a short-term world. In a world dominated by short-term thinking, Graham champions the benefits of long-term investing. Chapter 18. The Art of Portfolio Management. Graham delves into the art of portfolio management, emphasizing the need for a well-balanced and diversified portfolio. Chapter 19. Financial Market Ethics addressing the ethical considerations of financial markets. Graham discusses the importance of integrity and ethical behavior in investing. Chapter 20. The evolution of investment strategies. Graham reflects on the evolution of investment strategies over time. He discusses how market dynamics and investor behavior have changed. Chapter 21. Behavioral economics and investment decision-making. In this chapter, Graham delves into the emerging field of behavioral economics and its impact on investment decision-making. He explores how cognitive biases and irrational behaviors can influence market trends and individual choices. Chapter 22. Technological advancements in finance. Graham addresses the impact of technological advancements on the financial industry, from algorithmic trading to robo-advisors. Chapter 23. Globalization and international investing. As the world becomes more interconnected, Graham discusses the opportunities and challenges of international investing. He explores the benefits of diversifying across global markets. Understanding the dynamics of globalization becomes essential for a well-rounded investment strategy. A timeless guide for future generations. The intelligent investor stands as a timeless guide, but the financial landscape continues to evolve. In this final chapter, Graham reflects on the enduring relevance of his principles and encourages future generations of investors to adapt, while holding on to the core values of discipline, patience, and sound judgment. A continuous journey of learning. The Intelligent Investor is not just a book. It's a guide for a continuous journey of learning and adapting in the ever-changing world of investing. As you apply these principles to your investment strategy, remember that knowledge is power, and a thoughtful, disciplined approach can lead to lasting success in the financial markets. Happy investing. The Intelligent Investor is a timeless guide that transcends generations, providing valuable lessons on sound investment principles. As you embark on your investment journey, remember Graham's emphasis on rationality, discipline, and a long-term perspective. Stay informed, stay intelligent. Thank you for joining us for this summary. If you found this information helpful, don't forget to subscribe for more insights and updates on wise investing. Happy investing.